by the way, really quick, bro, had some runners off that daily morning briefing and watch list today as well, bro. You guys are, really missing out on some great opportunities by not taking advantage of that watch list. There are some runners on that thing, decent runners. Here, I'll try to show you real quick. All right, here's some of the ones that I had on the watch list. First one, UPS. It did most of its running in pre-market, right? But there was still value to be had there. You know why? Because you would have seen it doing most of its running during pre-market and put in a top of a range up here, right? It got up as high as 175, but I would have been putting in, the top of a range and a resistance right here where we kind of rejected, 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 rejected. So, up here is more than likely the top of the range. You give it a little bit of time off the open and then you sell this rip. You feel me? And you could have faded that thing for the rest of the day. Made bank. All right? That's one that was on there. Here's another one that was on there. Coca-Cola. Again, doing most of its running and ripping during pre-market. So when you see a stock or, underlying or whatever doing most of its running and ripping up unnaturally during pre-market, remember what I was saying. What goes up must come down. And there you go. Prime example. You could have just been watching it, letting it put in a range, letting it put in the top of a range. And let's go to the 5 minute so we can see it a little more closely. So you see that thing ripped up too fast, too high and too fast. It didn't have any healthy pullbacks. Therefore, it's going to tank off the open. So you could have sold that rip. You feel me? Boom. Right here. You want to give it a little more time right here. You sold that rip. Catch it down here. And then once you see it cracking through the 9 in VWAP, you're good to go ahead and at least fade it down to the 120. All right? And then if you're getting fancy, you sell that rep and then you chill and you let it put in a certain bottom of the range. Give it more time. You feel me? Make sure we're at the bottom of the range for sure, which I would be looking at this level, this 57.90s, because we're coming down here, we're bouncing off of this level, wicking up off of it, bouncing up, but look, we're bouncing up to the VWAP area and rejecting. So, being that VWAP is right above it, I wouldn't be looking to flip long right there. You're being too fancy if you're doing that, unless you're just doing it for a quick scalp. You feel me? But the better move would have been letting it come up here and reject off of VWAP and then selling the rip again back down to the bottom and putting in a new low. Even that is a little tricky. You got to know what you're doing. So the better move would be to let it, do all this erratic behavior and then wait for some logic to come in. And if you see where all these wicks are bouncing off of, we cracked it, we rejected off that level, then we bounced, came back up here, chopped around, rejected off our indicators, back down here to this level, this 57.95. Wick, wick, wick. So by these 3 wicks, this action and these 3 wicks, that this is probably the bottom of the range. And then it would have been safe to go ahead and flip long and grab some calls to the upside. And then you could have just rode that thing all the way up back to the top of the range for max gains. Right about here. These are all plays that are on the watch list that come out every morning.